John Higgins, Mortgage One. Happy Monday. So last week, not a whole lot going on with rates, pretty much stable at these higher levels. So it didn't get worse. I guess that's the silver lining there. We did have the Fed minutes come out from last week, and when we really take a look at what the Fed has said, both outside their meetings and then with these minutes, any cut in March is pretty much dashed. May is looking very unlikely as well, and based on the probability the market is putting on the next rate cut, it looks like it's going to be June. Having said that, a lot can happen between now and then. This week, we'll get a real nice indication of whether rates will stabilize here, maybe go lower or higher, because we've got the Fed's favorite gauge of inflation coming out. That's the PCE, so the personal consumption expenditure. That will give us a clue if the Fed feels like they've finally gotten their hands around inflation, which could bring back, if we get a low inflation number, it could be good news for maybe a May rate cut. But we'll see what that number brings. Next week, of course, we've got the jobs number, and that'll be another key indicator for the Fed in really what they want to do with rates. The job market has been incredibly strong, and I think that has, as much as anything, given the Fed a reason to pause here. So we'll give you an update next week after we take a look at the inflation numbers, and then ramp up for the big jobs number at the end of next week. Talk to you then.